Hello traders worldwide, welcome back again to MJ Crypto, and in this session I'm going to be talking about trading psychology. This video is duly sponsored by Vector by Nelogical. They are actually a trading software organization that helps traders to get linked to tools that can enable them analyze the financial market with ease. All right, back to the video, guys. If you do like what we do in this channel, don't forget to smash the like button and subscribe to this channel. Turn on your post notifications so you don't get missed out on juicy contents like this. Now, trading psychology. What is trading psychology? This is one of the most topical issues that every trader should understand. All right, they should understand this because this alone can determine whether or not you're going to be successful or you're going to be a total, an utter failure in the financial world market. Now, I see a lot of people come into my DMs and then they ask me this particular question. How do you get your setups and how are they actually so accurate? How have you built your portfolio from A to Z? And the real answer is that I have a trading culture. All right, I have a trading what culture, and we'll be talking about this in this video. Don't go anywhere, stay tuned to MJ Crypto right about now, because I'm going to give you just three good tips that can enable you scale from A to Z, from point 1 to 10, and from 0 to 100. And then trust me, you're going to come back and thank me later. Let's go again. Now, the very first thing you actually need to be conversant with is you having the right trading mindset. Okay, it's always mind over matter right here. Okay, so you should have the right trading mindset. And now, what is the right trading mindset? This is you not chasing what profit, but rather building your portfolio and managing your risk. Yes, a lot of you miss this point. You go into the market and your total aim is to make profit. I'm not saying that is wrong. Everyone wants to make profit, which is good. But in the long run, okay, where every factor is actually what's considered or looked into, it is not, I repeat, listen to what I'm going to say right now. It is not your skills that actually makes you profitable. It is not the technical analysis that you know that makes you profitable. All right. It is you knowing when to quit the market and when to stay in the market. That is what makes you what? Profitable in the long run, guys. Yeah, I'm just saying this out of experience. Okay. I've lost a lot and I've actually gained a lot. So from my own experience, this is me projecting it to you and making you understand, all right, that first and foremost, you need to have the right trading mindset, or what we call trading culture. Don't trade, don't chase profit. Let me put it that way. Don't chase profit. Build your portfolio. Be more concerned about how much you're going to lose than how much you're actually going to gain. Because at the end of the day, listen, Binance will always remain. Yeah, Binance will always be here. BitGet will always be here. FedDesk will always be here. Shout out to these exchanges anyway. And a lot of them will always remain. All right? Good. But your portfolio may not always remain. Don't you think so? Your portfolio might get wiped off in just a nanosecond if you go into the market hoping to get profit before building your portfolio. Now, not having this mindset, this trading mindset, which I call the trading culture, is what really makes most especially newbie traders FOMO. Okay, FOMO means fear of missing out. All right, FOMO is basically what? Fear of missing out, guys. Now, you see a coin is trending, and instead of you to wait for the coin to dip or even see it at top losers, you just rush in and start buying. You may be lucky, you hop into the trend, and the trend becomes your friend, and then you make profit and you scalp and all of that. But in the real sense, that is not how to trade. Okay, don't chase profit. Your goal is not to chase profit. Your goal is to ensure that you manage your risk properly and you have a target. You have a what? A goal. A goal is a future expectation. All right, in basic terms. All right, so you should have a target and ensure you're not chasing profit randomly without a strategy. That's actually very lame because you just get kicked out of the market instantly. Okay, so that's for that. And now the second tip I'm going to share with you right here, right now, is to ensure that you understand how leverage works. You are trading perpetual futures and you don't understand what leverage is. Sorry, man, you're on a long thing, bro. You are seriously on a long thing. Understand what leverage is first of all, because a lot of you see leverage as an avenue to make money. You see it as an avenue to what? Increase your portfolio. No, leverage is not just to increase your portfolio. Leverage is a debt. Do you understand? Is a debt what? Is a debt. It's a debt model. Let me put it that way. Okay, it's a debt model. Don't see leverage as a quick means to make quick profits when you are scalping or when you want to take a trade on futures. Okay, leverage is only giving you an opportunity to scale up a position size. Yeah, that's what leverage is. You have $10 and you want Binance to borrow you more, to lend you some funds. You want to borrow from Binance. Okay, you want to borrow from an exchange. Let me not just use Binance as the only case study here. So you want to actually borrow some funds, okay, to increase your position size. So that is the exact reason, and that's what leverage is. Nothing more than that. So the higher the leverage, the smaller your margin is, the higher the risk you're incurring on your position size. It's that simple. Now, take for instance, you're actually going to the bank, you walk into the bank, and you want to take a loan, and you have a collateral that is worth 500,000. All right, you have a collateral worth 500K, and then the amount of loan you actually want to borrow is about 2 million. Now, do you think they're going to charge you a lower interest rate or a higher interest rate? Definitely, they will charge you a higher interest rate, for goodness sake. You are taking a loan that is actually higher than your collateral. The risk is going to be higher, okay, if at all you are even granted that loan in the first place. All right, so it's the same way the exchange works. If you have a margin of, let's say, $100, and you want to trade with that $100, and you're using a leverage of 125x, all right, which ordinarily would make your position size to become um um 12,500. All right, simple mathematics. Don't you think the risk is too much, and you're trading with the entire $100? You're going to put yourself in a position whereby you allow the exchange to put all the risk on you. That the risk of that position is actually going to be about more than 50%. And if price goes against you a little, your account is blown off. And that is what most newbies do. And it's so irritating. It's actually so irritating, because that is what they believe, that futures trading is just an avenue to come on board and make quick profit. I don't know who taught you that. I don't know who gave you that mindset. But honestly, if you are watching this right now, I want you to eradicate it from your mind. Have a rethink. Okay, have a rethink. Have a transformation of your mindset and understand how leverage works particularly. Now, the third I'm actually going to give you, the third one I'm actually going to give you. Listen, guys, this is a no-brainer. The third on the list is, don't go into the trade without putting your stop loss. See, guys, not putting your stop loss is synonymous to you crossing the road blindly without looking left or right. Now, what do you think is going to happen? You could get knocked down by a vehicle, and you already know what the next thing could be. Either you may die, or you may break your legs, or you may break your bones, or you could just get injured. So, you trying to avert those circumstances from happening while you're trading, always put your stop loss. In short, your stop loss should be the very first thing, because that is you telling Binance that this is how much I'm willing to risk on this particular trade. All right, this is you telling Binance that if the price goes against me, I want to leave the market at this zone. This is how much I'm willing to risk. Trading is all about how much you are willing to risk, not how much you are willing to make. Be defensive. 90% of the time, be defensive. Then the remaining 10%, you could be aggressive. You could scalp while you're also defensive. All right. So we have aggressive traders, we have defensive traders. I'm more of a defensive trader. I take risk, but calculated risk, and that has helped me over time to build portfolios. All right. Even when you are scalping, be defensive. Don't just trade blindly and say your father doesn't own the market. God damn it, he doesn't own the market. So why do you think the market won't go against you at some point in time? Do you understand what I'm saying? So basically, these are 3 good tips that you need to understand before um going into the market, okay, to trade. It's actually very simple. I get the first one, which was have a trader's mindset. All right. The second was ensure that you understand how leverage works. And the third is don't go into a trade without a stop loss. Always put your stop loss first before you go into the trade. It's to tell buyers that this is how much I'm willing to risk. It's that simple. Don't put your words, don't forget to put your stop loss before you set your trades. You can neglect the take profit, doesn't really matter. As long as you're not making losses, that's more important to you. Because what would it profit you to go into a trade with $100 and you're coming out with $20 left in your account? It's going to demoralize you. And you see, trading has a way, it works with your psyche. All right, it works with your psyche. There's what we call revenge trading. This is you ignoring um, the actual setup of a trade and then making decisions based on emotions, based on anger. I've lost $100. I'm going to go back. I'm going to smash them back right away. I'm going to smash them back right now. And then you end up losing even more. So, guys, this is MJ Crypto. I'm going to stop here. This session would actually continue in my technical analysis course that is coming up. It's called the Basic to Advanced TA course.